All right, so I got a weird question today, and it was, why do interest rates even matter? I wasn't sure if this person was being real or if it was a general question. I answered it, but it made me want to do a video on why interest rates do matter when you're buying a house or an investment property. So anyways, I'm going to share my screen real quick just so you guys can get an idea of the difference between interest rates from back in 2020 to 2021 and where they are today, just so you can see the affordability of a house then and now. Let's get into it. So now that you guys can see my screen and see my loan amortization calculator, you can see a quick example. Let's jump right into it. The example I'm using is a $300,000 house. Today's interest rates are roughly 6.75% with a 30-year amortization for their loan. That is how many years the loan is for, essentially. Very high level. And start date, as put this month, January 2025. And our monthly payment is $1,945.79. That is a $300,000 house at a 6.75% interest rate. Back in 2020, rates were as low as 2.75. So if we change that to 2.99, but first let's remember that 1945. Let's say 1946 just to remember it. Look at that difference. It was 1946 is today's mortgage payment at the exact same loan year for amortization and same amount. That is a massive difference in affordability, isn't it? $682 monthly payment difference. That's that's a big difference in my opinion. That's a third of the cost between the two. Pretty crazy. I just want to show a quick example of that because that is where rates are at today compared to how they were in 2020, 2021-ish. And that's a big difference. I want to say I read today that they are predicting rates to be at 6% as the new norm average. So that is 1798. So only $147 difference from today, which we should expect not a huge difference. But before I go, let's do a quick example on if this was an investment property. We'll use the same numbers, 300,000. In 2020, I think the rates for an investment property, I have one for 3.75 for a commercial loan. And that loan is a 20-year loan. And the loan amount, we'll use real terms here. I think it was $325,000 we bought it for. So that comes out to be $1,926. Sounds about right. Actually, we must have a lower interest rate because our payment is a little bit lower than that. So that's where it is now. Commercial rates at one point last year, I know were hitting like 9%. I know it was definitely 8, but I'm pretty sure it was 9 at one point. Maybe it was 2 years ago I'm thinking of. But we'll just put 8% here for now. So we'll say 8%. Look at that jump. Almost $1,000 difference. That's pretty crazy. Does this make it a deal? No, it doesn't. Anyways, high level guys, I just want to do a quick video on this. Thanks for watching.